You know, this morning we had a wave of great earnings releases, but it fell on deaf ears as anxious feet continue to seek the exits. In fact, the Dow Jones Industrial Average was the best performing major index today, and that underscores that there is a rotation to safer names for money that would rather be in the market rather than the sidelines. Nevertheless, though, it's pretty clear to me that investors are concerned, and I think there are several reasons why. First, of course, the election is only less than 2 weeks away. And then there's the Fed, and I'm not talking about an interest rate hike, but just poor monetary management, including the way and how they changed the rate changes. Valuation is a concern, and also the persistent lack of a catalyst. Now, according to FactSet, the trailing 12-month PE ratio for the S&P 500 is at a level not seen in many years. We're talking 19.4 PE. That is significantly above the 10-year average, although nowhere near 24, which ushered in the last major market crash. I put more weight on the forward PE ratio, which right now, it's pretty clear that coming into this week at 16.5 was worrisome for the street, and based on recent reactions, it should have been. This week, however, earnings guidance should make that forward PE a little bit more palatable, although I will admit, for old school investors, probably still too high. So this is the dilemma, and it's only going to get worse tomorrow after the latest round of earnings. We saw a current stock market legend take a big hit. We're talking as others are edging higher. That's Amazon. Their earnings dried up. I couldn't resist. Anyway, they came in at 52 cents. The street was looking for 78 cents, so that is a huge, huge miss. That stock is getting hammered. On the other side of the table, Alphabet/Google posted earnings of $9.06, beat by 43 cents. Ad clicks were up over 33%. The stock is initially higher. Also, Expedia popping on earnings as well. So it seems that this market has to maybe dip now. But listen, it's great. I would be happy to buy this on an orderly dip to the downside. Joining me now to discuss, Mark Avallone. Mark, what are your thoughts here on this market that seems to be sort of stuck in a very narrow range as anxiety builds?
Well, I think you made some good points in the introduction, Charles. Market PEs are a little higher than historical averages, and when you couple that with being 7.5 years into a bull market, just ahead of a historic election, you can see how some investors might want to be skittish. When you throw in that in December the Fed's going to meet again and more than likely raise rates, you have a scenario where owning stocks becomes a little uncomfortable for some investors.
So what do you do then? Because the bond market rally is substantially longer in the tooth, and other asset classes don't necessarily look as attractive. Listen, you've got some gold as a hedge, but what would an investor do in this particular circumstance?
Well, when you're looking at a potential rate rise, it does throw a monkey wrench into the alternative to stocks. Bonds are typically looked at as an alternative, especially in a balanced portfolio. And in an interest rate rise, bond prices usually take a hit. So it does create an investment conundrum. If you're looking short-term as an investor, it's very difficult to invest when markets are at all-time highs. It's easier to invest when we've just had the bad news. And people don't know if we're facing good news or bad news right now. And the uncertainty is what's hurting both the bond and the stock markets.
Mark, real quick, buying a dip has been a very successful strategy over the last 6 years. A stock like Amazon goes down 50, 60 bucks tomorrow. Is that something you would consider?
Well, we don't pick individual stocks, but we do think the strength of the consumer is there, and we think the consumer continues strong into the fourth quarter, and we don't think that one corporate earnings quarter should change someone's outlook on the overall market.
Well, my wife told me this morning before the number came out that she wanted to buy the dip, so I'm going to go with her. Thank you, Mark. I appreciate it. Great stuff.